a battle is brewing between Finance Minister Enoch Godongwana and Reserve Bank Governor Lesetja Kganyago over South Africa's inflation target. The Reserve Bank wants to shift its focus to the lower end of the 3 to 6 target range, which means that they're looking to aim at 3%. But the Finance Minister, Godongwana, insists that any formal change must go through cabinet and broader consultation. The clash highlights growing tension between monetary policy discipline and political oversight. For more on this, let's speak to independent economist Duma Gqubule, who joins us now. Duma, is this surprising that we've gotten to the stage, considering that when the Reserve Bank governor decided that 4.5% was actually where he preferred to anchor the inflation target, not much was said even then?
Yes, but that was within the range. Now, basically, what the Reserve Bank has done, it has unilaterally implemented a new monetary policy, a 3% target, without consultation with the president, with the cabinet, with other members of the Government of National Unity or National Treasury. And we saw that Treasury was humbled this year for not consulting South Africans about the VAT increase, the other members of the Government of National Neoliberal Unity. And we had 3 budgets. And 2 months after we've settled the budget, this Reserve Bank is behaving exactly the same way that National Treasury has been behaving as well. So I think it was out of order, and I believe that the president must step in and he must tell the central bank to stay in its lane and not try to bully South Africans into accepting this 3% inflation target. Yes, so that's my personal view, that everywhere in the world, Arabile, the central bank does not, there are 2 types of independence. There is political or goal independence and operational independence. So now, in every country in the world, the political or goal are set through democratic processes in parliament, in the national dialogue. We must debate about the central bank, about the ownership of the central bank, the mandate of the central bank, the independence of the central bank. We must also debate whether inflation target is an appropriate policy in a country that has got the 2nd highest unemployment rate in the world. The central bank can't be independent of our national goals. It must also target GDP growth and jobs. Jobs are the #1 priority in this country, and you are only care about this 3% target.
One would say, and there's one side, you're part of the argument, and I'm going to try and stand up for the Reserve Bank, if possible at all. I mean, I'm not agreeing or disagreeing. I'm just going to play devil's advocate here and say, Duma, the reason they'll say that 3% should be the target is that if we do that, that will ensure that prices don't increase exorbitantly in the country. That means they don't have to hike interest rates as quickly either, which means that your money stays in your pocket for longer and doesn't get eroded. So all in all, they're helping to better the economic situation in the country. So is the problem that they're doing it unilaterally or that they've gone to 3%?
I think, so first of all, it's not their call. They must stay in the lane and shut up, and they must allow us to have our democratic processes. That's #1. #2, Arabile, I've looked at inflation over the last 25 years, since inflation targeting was introduced in February 2000. And interest rates are there to address a situation where there's excess demand. Too much money chasing too few goods and services. Now, the inflation that we've had, you might have heard Milton Friedman, he said inflation is everywhere and always and everywhere a monetary phenomenon. Now, in South Africa, for the past 25 years, I kid you not, I looked at this, we have never had a situation where inflation was caused by excess demand. Inflation everywhere, and was always and everywhere a supply side shock. So what we've had is different combinations of supply side shocks. We've had the exchange rate, which is the #1 driver of inflation. We've had international oil prices, food prices, droughts, adverse weather conditions, and pandemic-related shocks in recent years. But everywhere, these supply-side shocks are transitory. They eventually work themselves out of the system through base effects. So every time the inflation has gone down, like now, it's got nothing to do with monetary policy settings. So when it goes up or down, it's got nothing to do with monetary policy settings. So using interest rates to address a supply-side shock is the equivalent of prescribing water to cure a broken leg. So why should the Reserve Bank target something that it can't control? Inflation is a society-wide thing that we must address through targeted fiscal and industrial policies, supply-side inflation through targeted fiscal and industrial policies. There is nothing that the Reserve Bank can do. So what we're seeing now is 3% inflation. That is because of nothing has got to do with this monetary policy settings. And finally, this means that we are going to have higher interest rates for longer for no reason. We have a prime lending rate of 7.5%, one of the highest in the world, in a country that's going to grow by less than 1% this year. We are going to have the third consecutive year of GDP growth that is less than 1%. And you have this insanity of a monetary policy committee that wants to choke us further with these high interest rates. And we've also got a shock from Trump, with the tariffs. We should be implementing counter-cyclical fiscal policies to counter what is happening, the shocks that we're getting in the economy.
Yeah. So let's put this simply as well for our audience. So you're basically saying then that even if the South African Reserve Bank was to target 3%, keep interest rates higher as they currently stand, the prime rate currently is at 10%, the repo rate is at 7%, prime rate at 10.5%. Ultimately, it means that you're not actually enabling people to spend at this point in time, which then weakens our economy even further. And then we're not going anywhere, and the Reserve Bank is actually stifling growth. Am I correct?
Yes, 100%. What logic is there in making us, pay more for our bonds, for our houses, when it's got nothing, our inflation it's got nothing to do with us spending too much in the economy. We have huge excess capacity in this economy. The last time I looked, it was about 22%. So companies are saying there's not enough demand for the things that we can produce. So we are operating at about, we've got spare capacity. So we should be stimulating this economy through monetary policy, through aggressive interest rate cuts. What is the logic of having a 7.5% punitive real after inflation interest rate? It makes no sense whatsoever. And I think it's about time that South Africans stand up to this Reserve Bank in the same way that they stood up, against Treasury and their VAT increase. And I think that's what we need to do,
Yeah, so that means that greater understanding is going to be necessary in order to get this conversation right. Do you think this raises the noise on nationalization, which is a conversation which obviously happens ever so often then periodically when it comes to the South African Reserve Bank?
Yes. Arabile, I don't understand what's so difficult about nationalizing the Reserve Bank. I looked. These shares are worth 15 million rands. Like it's an upmarket house, Arabile. It's cheaper than President Ramaphosa's house, wherever he lives in Hyde Park, So why can't we just, make an offer to the shareholders of the Reserve Bank at a premium, like at 100% premium, that'll be 30 million rands. Most of them, 800 of them, will accept it. And then we can go on and move to the other issues. Then we must discuss the independence of this bank. It is absurd to think that this central bank can be independent of our national goals. We had a national development plan which had macroeconomic policy targets, 5.4% GDP growth, but the central bank and Treasury, they blue-ticked this national development plan.
Yeah.
And so we must discuss the independence, then we must discuss this inflation targeting. We must have a dual mandate like you have at the US Fed. The US Fed targets inflation and jobs. And you, Arabile, you obviously cover this a lot. Every single Fed chair, I used to listen to Janet Yellen. Every single speech, she talks about the jobs crisis and that monetary policy must do something to address the jobs crisis. She also was concerned about the black unemployment rate in the US, which was higher than the one for white Americans. So the central bank, as we saw during COVID, has got so many policy tools it can use beyond interest rates to get this economy growing. They can capitalize development finance institutions. They can provide financing to government, as they did in 2023 when they, gave Treasury 150 billion rands. And in that kitty, there's still another 400 billion rands. There's so many things that we can do, and we must not be distracted, this idiotic debate around this 3% target. And the reason why I'm opposed to it is that the central bank hasn't got the policy tools to achieve this 3% target.
Yeah.
If they do achieve the 3% target, it's got nothing to do with what they did. It's a fluke because of supply-side shocks that are unwinding themselves out of the system.
Can the South African government, not just through a proclamation in Parliament and voting through Parliament, then just decide, actually, we want you to have a dual mandate. We want you to have inflation as a dual mandate, keep it at whatever figure or keep it at the range of 3 to 6%, no, not this 3% figure. And then you have to look at the jobs crisis without nationalization. And I only say without nationalization because that clearly seems to create a whole lot of hysteria as well.
No. So, thank you, Arabile. This is a very good question. So the ownership, independence, and mandate of the central bank are completely separate and unrelated issues.
Yeah.
As you correctly says, we don't need to nationalize to change the mandate. So I'm not a lawyer, but I don't see why we can't take this to Parliament. Let's put it there in front of all the political parties and let's vote on a jobs mandate. Let's have a campaign to have a jobs mandate. And if you know that in the US, there's a long history, the civil rights movement, Martin Luther King, where they campaigned for, this dual mandate that they have in the US. We should have a similar campaign. If we want to solve this unemployment crisis and stop this insane obsession with inflation, then we should address this jobs crisis. Yeah.